Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, my name is Titis Prihatini. I am class A20, Accounting Diploma Program, Faculty of Economics, Yogyakarta State University. In this happy occasion, I want to tell you about a topic of management accounting. For the first is Management Accounting Information System. Management Accounting Information System is an information that produces output using inputs and various processes required to meet certain management objectives. The Management Accounting System has three general objectives. 1. Provision of information used in calculating the cost of service product and management for other desired purposes. 2. Provide information used in planning, controlling, evaluating, and continuous improvement. 3. Provision of information for decision returns. For the next is process management. 1. Planning. Planning is the process of determining what the company wants to achieve in the future and establishing the steps needed to achieve it. 2. Organizing. Organizing is namely the process of the compiling and coordinating the organization structure according to its objective. This includes manage the research out by the company to divide the various tasks, responsibilities, and authorities in each section. 3. Direction and providing motivation or directing leading, namely being able to provide guidance, direction, and instruction to other members to have a sense of responsibility towards their respective duties. And good manager will be able to provide direction and motivation for his employees so that employees' performance and loyalty to the company will be high. 4. Controlling. Controlling, being able to control the planning activities that have been implemented by monitoring the implementation of a plan and taking the necessary corrective action. 5. Decision making or diction. Decision making is all management function essentially require decision making to achieve the goals that have been set. Next, the difference and similarities in management accounting and financial accounting. The similarities of financial accounting and management accounting, both of which provide information for decision making, while the difference is distinguished through several factors, namely 1. Based on the objective. The purpose of financial account is to produce financial report that describe the condition and performance of the company in a certain period. Management accounting aims to produce specific and detailed reports, identify problems that arise, and resolve those problems. 2. Based on the report users, financial accounting help external parties to make decisions related to the economy and investment so that management performance can be evaluated in running a business. Meanwhile, management accounting is used to provide financial information for the needs of the management on or internal parties of the company, which is used as evaluation material and means of making decisions for the company. 3. Based on the time span. Financial accounting produces financial report that cover a certain period of time. For example, in a period on 1 year. For example, in a period of 1 year, half a year, or monthly. Meanwhile, management accounting has a much more flexible time frame compared to financial account, for example, daily or weekly. 4. Based on the focus of information. Financial accounting focuses on the past information by providing an overview of the responsibility of company management for managing company funds. Meanwhile, management accounting tends to be future-oriented. The role of management accounting. 1. Assist internal parties in decision making. 2. Help predict cash flow in the sense of helping manager decide how to allocate cash and resources to generate project revenue growth. 3. Help to know the realization of performance. This is to find out the difference between what was planned and what actually has been realized, and help management build positive variance check and make changes to negative things in business continuity. 4. Analyze the expected rate of return and rate of return. For the next is standards of ethical conducts for management accountants. Ethical behavior is action that are right and in accordance with the ethical guidelines for ethical standards and ethical conflict resolution provided by the Institute of Management Accounting. 1. Competence. 2. Confidentiality. 3. Integrity. And 4. Objectivity. IMA also provides guidance on conflict resolution to ethical issues, namely as follows. 1. Follow a predetermined policy. 2. For unresolved ethical conflict. 1. Discuss the conflict with the immediate supervisor or the top manager who is not involved in the conflict. 2. Referring to the Sarbanes-Oxley Act to provide legal protection against allegation of corporate mismanagement. 3. If the immediate supervisor is the CEO, consider involving the board of directors or an audit committee or maintain confidentially unless legally required. 5. Discuss issues in confidential discussion with objective advisors. 6. Consult with lawyers or legal advisor on legal matters. 7. The final option is to resign from work. For the next is why I chose the topic of management accounting. Because management accounting is need to provide the running of a business to analyze performance, identify problems, and look for hidden opportunities that can benefit the company. Okay, I think that's enough for the topic of management accounting. Thank you for your attention and see you. Wassalamualaikum warahmatullahi wabarakatuh.